Good morning, it's Friday the 3rd of February and this is the morning update from Phoenix Blue presented today by Tom Colley. Today's non-farm payroll day, data out at 1:30 UK time. As usual, we can expect quite a quiet morning or session ahead of the announcement. So caution required as always. Whether or not you trade the actual non-farm payroll announcement is obviously down to your personal trading plans. The week so far has been characterised by the interventions of Donald Trump and his advisors, talking about currency manipulation on the part of the Chinese, the Japanese and the Europeans, or to be more specific, the Germans pulling the levers of the Europeans. That caused some volatility. I think it was Tuesday, which did actually cost us a couple of losing trades. We have therefore been trading somewhat cautiously since then and have been looking to trade price action and changes of cyclicity at the levels that we'd previously been looking to trade as market cap limit orders. Okay, let's have a look at the news first. Just looking at yesterday first, construction PMI came in slightly disappointing on the pound yesterday morning. Then we had the Bank of England inflation report, MPC official rate votes, the official bank rate and the policy summary, followed half an hour later by Governor Carney speaking. As expected, rates were held at 0.25%. The vote was unanimous. The direction of the statement, the inflation report and Carney's press conference was predominantly an admission that they'd got their predictions in terms of inflation, growth, particularly wrong following the Brexit vote. They have given themselves credit for acting quickly and being part of the reason for that. But clearly there are outside factors such as the devaluation of sterling, which has helped in terms of growth in the short term. What we did see was a sell-off on sterling through that event. Not much came out of the ECB President Draghi's speech, and then we had unemployment claims out of the US with a strong figure. Last week we had 260 new unemployment claims. They'd forecast 251 this week, but we came in at 246. That was on the back of Tuesday's ADP non-farm employment change. Now, this isn't the big non-farm employment change we're waiting for today. This is an estimate and also excludes government hiring. But the reason I've highlighted this is we've had good unemployment. And we've had a really high figure on the employment change there. Last month 151, forecast this month 165, and we came in at 246. The question is, will we see the official non-farm figure this afternoon? Following those two, it's reasonable to expect the probability that it will be in that direction. The feel-good factor from businesses from Trump in terms of his protectionism to American businesses, to his removal of legislation and possible corporation tax cuts, etc., should in principle lead to a more positive view by businesses and therefore an increase in hiring. So I think today, if we don't hit the forecast, it will be somewhat of a surprise. We've been talking for months about a 150k being a critical level. I think anything above 150k will be satisfactory, but it wouldn't surprise me to see a higher rate. The average hourly earnings, we had some good figures at 0.4%, surprisingly high last month. We're only forecast 0.3 this month, so anything 0.3, 0.4 there will definitely be positive on that side. So things pointing to good figures for non-farm payroll, but that there's no certainty, and it's not so much the result you need to be careful of, it's the volatility around the result immediately following the result. It's not unusual for the market to shoot one way only to stop and reverse and shoot even further the other way on non-farm. So if you're not used to trading that, you don't have a very strict plan, our advice would to be to do what we're doing, which is stay away, and then we'll look to analyse over the weekend the net result. Okay, quick look at the charts. Well, the dollar had a bullish day through yesterday. We had a big look down to new lows for this year, or really, to be fair, since November of last year, a new low there. There's no significant support in this area that I can find on the chart. The next level is here at about 98.80. That'll be the next level. We're back up about 99.80 now, which is a pretty critical level. Would like to see non-farm today drive price to the long side if we get that good data out of this channel to give us a long bias going forward into next week. The yen, somewhat similar. It's got a couple of levels through here. We have a open market cap order at this level here. That's the only market cap we left in place. That will go this morning. We won't hold that into non-farm. We don't hold orders into non-farm. However, if the figures do disappoint, that's an area that we will be interested in potentially intraday this afternoon, or certainly going into next week. But the sheer volatility there is we won't leave that order in place. Clearly there's a level through here at this level that's significant there. If we can break above that, that again will be very bullish for the dollar. It's a big move that I don't necessarily think we'll see that today, but anything in that direction is going to be reassuring to that dollar move if we get it. Okay, on the euro, yesterday price came up to this 820 level, 825 level. I spoke about this earlier in the week. It's a level that I considered a market cap level in normal circumstances, but this spike through here was a risk factor. So I had a market cap order move back here at 85, simply because that meant that within my entry to stop range was that high there was encompassed. As it happens, price respected the level that we preferred. Unfortunately, we didn't get in on that. We were looking for intraday ways into that yesterday to take it back down to the falling wedge here. Clearly, if we get dollar strength today, we can see a break of the falling wedge and look for euro weakness on the back of dollar strength if that's to play out. Okay, over on the pound, as you can see, we had a bearish engulfing bar yesterday on the back of the Bank of England and Mark Carney's press conference. Downside looks certainly follow through today. We've got a really strong close into yesterday's low. No pullback whatsoever, no profit taking. So we could clearly see a move down to this level at about 24.15 down here before we have support, and we can look at maybe opportunities there in relation to that dollar strength. Pound's a market that is obviously Brexit orientated. This week we've also had Parliament voting to allow the government to put forward the Article 50 to start the leaving process. We also had a white paper that was somewhat dismissed as being little more than a detailed version of Theresa May's speech last week. So there's a lot going on for the pound at the moment. So unless we see something clear, we are cautious in this market. Now over on the Aussie, we've seen a clear breakthrough our last level of support through here, and again there's some support you could see through there. We broke through that very strongly yesterday on Aussie strength, even as we got a bit of recovery on the dollar. Clearly we're now looking to this next zone up here. We've got this trend line here which looks like we have the potential of retesting, and we'll be looking to the COT data to give us a clue to see if we're going to get get a signal again. We've had signals at this type of level previously. Remember, for me, these blue boxes are previous signals at previous levels. If we get to this level, and obviously we won't see this data this week, but if we get to this level without reaching an extreme, then that clearly suggests to us there's the possibility that it will go to further to the long side. Having said that, this week we won't have that data. The data's from collected on Tuesday, but if we can see any sort of clue as to that level of a signal approaching, that will give us more confidence in terms of a trade to the short side from that zone next week. Over on Kiwi, now Kiwi's been, with the exception of the pound following yesterday's short move, has been the weakest of the majors and minors this week. When we saw dollar weakness, it didn't have the strength to take advantage of that. You can clearly see we came up to a level here of resistance in confluence with a trend line here. We took a trade to the short side here. We got money off the table, stops to break even, and then yesterday we were stopped out in this trade here, which you can see was quite spiky. We will, on dollar strength, clearly expect further downside to this market. If we were to get back up to this resistance level here that I've got marked with a thinner line, that's an intraday level for me. I would look at considering taking that trade short, based on the fact that personally I'm more convinced that we'll get NFP figures for dollar strength. But quite honestly, this morning tends to be quiet before the release, so I'm not expecting to do that, but it is an interesting level that I will keep an eye on. Aside from that, we're also, as always, looking at commodities. An opportunity arising on copper here. You may remember we shorted copper at the back end of last year. We took profits through to this level down here before price came back and took us out at break even. We're now back at this level here. We've got a COT extreme signal. When I dot that box like that, that means it's a current signal. A reminder that it's a current signal. In this instance, we've also got triple stochastic divergence, which is really, really rare and a very strong signal. We are in that respect, I was looking for opportunities yesterday and the day before for an intraday entry here where I could get my stop to break even before we got to the trend line. I had a level, price didn't pull back on the hourly chart, so that opportunity didn't arise. We've now had a gap and an open below our what's now a resistance level here. We'll be watching price to close that gap today with a view to an entry on Monday, all things being equal, to take this back to the downside. We'll look for a first target here and a second target here, but quite possibly the market has the scope to levels here around the 2.2, should we say, levels on the over the longer term. Okay, guys, that's it for today then. So caution for non-farm payroll. Reminder, next free trading event, Thursday the 16th of February in London. Absolutely free, chance to trade alongside the Phoenix Blue fund managers, to understand a little bit more about how we trade, for instance, the commitment of traders, how we trade commodities, how we analyse the markets both technically and fundamentally, and how we lay all those three factors on top of them, take into account seasonality. So we've got a really big, broad picture and some very high probability opportunities. If you're interested in this event, drop us an email at info@phoenixblue.co.uk. Just headline that or title that free trading, and that will go to the right department, or alternative, go through the contacts page at phoenixblue.co.uk, and we'll get you the invitations and etc. out to you for that event Thursday the week after next. Okay, guys, that's it for today. Have a great weekend. Let's hope we get something out of non-farm payroll that gives that dollar some direction, so we've got something meaty to trade through next week. Thank you very much for listening, and we'll look forward to speaking to you on Monday. Goodbye.